Hi, I'm Jeff Saylor, and welcome to Jeff Saylor's 2022 A&A Watch List. We all lead busy lives, and sometimes the amount of accounting and reporting updates can be overwhelming. And before you know it, there's a new requirement that sneaks up on you, and you miss it. For that reason, I've developed this quick checklist to make sure that you stay up to date. Now, for this presentation, we will be looking at effective dates from the perspective of private companies. So let's get started. Let's start out by looking at accounting updates that roll into place this year. And here's the biggie. Accounting for leases. You've seen this coming for a very long time. This comes out of Update 2016-02. Hey, that means it's 6 years old. And then, of course, we've had various updates after that. Now, if you want to look up this thing in detail, you go to the FASB Codification Section 842. So what does this mean for you? Well, the core concept is an entity should recognize assets and liabilities arising from a lease. Now, what does that mean? That means that all leases now go on the balance sheet.
Oh no.
Well, what about operating, Jeff? Yeah, all leases, operating, and what we used to call capital finance. So it's a big change for anybody working with GAAP. Now, there's new requirements for a contract to be classified as a lease. That complicates things. There's a requirement to separate components of a lease, meaning if you've got more than one thing rolled into one contract, that's got to be separated out. And there's new contracts or new requirements for classifying a lease, either operating or financing. Now, it's not a big change there, but there are some things you need to be aware of. Now, there's rules for the initial recognition and measurement, getting it on the balance sheet. Rules for the periodic recognition and measurement, that gets it into the P&L and the cash flows. Lease modifications, yeah, sadly when things change, you got to go back and crunch the numbers all over again. And of course, like there always are, there's rules for presentation and disclosure. Our next one is disclosures by business entities about government assistance.
Say what?
This is kind of an interesting one. This comes out of Update 2021-10. It's fairly recent. It's interesting. This update requires the following disclosures about transactions analogized as a grant or contribution. Now, what in the world is this about? Well, this came out of all the COVID thing.
Oh.
See, for the first time ever, we had mass amounts of business entities getting money from the government, PPP loans and things like that. And because of that, people had no guidance, and they analogized, that's a tough word to kick out, analogized to international standards on government grants and the not-for-profit accounting, such that they were not going to show a liability that really wasn't a liability. Well, with that came from some confusion, and the FASB came up with disclosures to make that clear to the users.
Thank you very much.
So what you have to disclose is information about the transaction and the accounting policy used, line items and amounts in the balance sheet and the income statement that are affected, and significant terms and conditions of the transaction. And that would include contingencies and commitments. Presentation and disclosures by not-for-profit entities for contributed non-financial assets. Now, this comes out of Update 2020-07. Now, don't freak out on this. We're not changing anything with recognition and measurement. What we are doing here is better transparency. Now, this one, I know I'm talking about effective dates for the end of this year, but this one actually is effective for periods beginning after June 15th of 2021. So if you've got a June 30th year end for your not-for-profit, this has rolled in as of June 30 of this year. Now, for calendar, yep, you'll be doing it at the end of this year. So what's going on here? non-financial asset contributions, land, buildings, free services, things like that, must be presented as a separate line item in the statement of activities and not included with the contributions in cash and other financial assets. So it's a matter of giving the user more information by separating it out from the financial assets.
Oh.
In addition, you've got disclosures that are required to disaggregate the contributions by type. In other words, tell me what you got in gifts in kind and break them into logical groups so I get a better understanding of what's gone on there. So it's a quantitative thing, and then these are all backed up with some brand new qualitative disclosures. So you're going to want to make sure you look at your disclosure checklist for that. Now, those are the ones that I really wanted to highlight. These I'm not going to go through because they are narrow scope. Perhaps some of you are dealing with them. I doubt very many of you, but I will hit them very quickly. 2021-07, determining the current price of an underlying share for equity classified share-based awards. 2021-04, issuers accounting for certain modifications or exchanges of freestanding equity classified written call options. 2020-08, non-refundable fees and other costs. 2020-01, clarifying the interaction between topic 321, 323, and 815.
Huh?
Basically, this is dealing with equity securities, equity method in joint ventures, and derivatives in hedging. 2019-12, simplifying the accounting for income taxes, some nuances there, once again related to some complicated areas. 2017-12, targeted improvements to accounting for hedging activities. So what we have here is a bunch of narrow scope. If you fall into that category, please look those up. Those all go into place at the end of 2022 as well. Now we move on to the audit standards. And we got a big one going on.
Really?
That is evaluating audit evidence. That's SAS 142. That kicks in at the end of this year. This year's audit, you have to have this in place. What does it require? You have to evaluate information to be used as audit evidence. And of course, that includes the results of procedures. So what does that mean?
I don't know.
Well, it means that here you are, you've done all these procedures, but that doesn't really make an audit, now does it? You have to look at the results and decide, does that give me enough oomph to say I can put my name on the report? And that's what this is about.
Oh.
So based on that information, you conclude whether you have acquired sufficient audit evidence such that you can write that report. Now, what does this really mean to you? It means you need to have a dedicated work paper in place. I'd title it Evaluation of Audit Evidence. And then in that, you go through and write up why you believe you have obtained sufficient audit evidence. I can assure you, if that is missing from your audit work papers, when you go through peer review, you're not going to have a happy day.
Oh no.
Now, some key considerations. These are the things you want to think about, and these are the buzzwords you want to put in your work paper to show that you know what you're thinking about. Sufficiency, appropriateness, reliability, relevance, precision and detail, accuracy, completeness, authenticity, and the susceptibility to management bias. These are the things you should be thinking about, and thus these are the things you're going to want to document. Not much going on in the SARS this year. Most of it happened last year, but there was one little thing I need to point out.
Oh, really?
Because in SARS 25, there was a little glitch that could have caused some problems. And so in SARS 26, entitled Quality Management for an Engagement Performed in Accordance with the SARS, and you say, well, what's that got to do with last year? Well, actually, it has very little. It has to do with some new quality management standards we have. But at the very last line, they made a technical fix. And it says you are not required to have an engagement letter prior to beginning a review engagement. Do you have to have an engagement letter? Yes, of course you do. Do you have to agree upon the terms of that engagement, that review, what they do, what you do? Of course you've got to do that, but you don't necessarily have to have the engagement letter right away. And the wording in 25 made it feel like you might have to, and obviously that could have created a lot of logistical issues. Well, that wraps up our 2022 A&A watch list. If you need any help with any of these topics or simply need some engaging and entertaining A&A CPE, please check out my numerous webcasts at jeffsaylor.com. Thanks for watching.